In this video we are going to talk about 10 monthly dividend stocks. So before starting this video, please like this video and subscribe to this channel for our future updates. The Federal Reserve increased interest rates just yesterday, marking the first time in 2019 that they had done so. Increasing interest rates are generally seen to be positive for income investors, but because the Fed intends to only implement incremental rate increases of 0.25 percentage points, it is quite likely that rates will continue to be exceptionally low for at least a few more quarters. Income investors who are now waiting for better yields on bonds and savings accounts have the option of investing in high-yield dividend stocks as a source of consistent income while they wait. The vast majority of high-yield companies pay dividends or distributions on a quarterly basis. Nevertheless, these monthly dividend stocks offer yields of at least 6% and make payments on an average of once every 4 weeks. Number 10. AGNC Investment Corporation, ticker AGNC. AGNC Investment is a mortgage real estate investment trust, also known as a REIT. A REIT is a form of corporation that is eligible for certain tax benefits and is required to distribute at least 90% of its taxable profits to investors. This mandate ensures a dividend that is generally stable, and the company AGNC pays out 12 cents on a constant basis each month as a reflection of this. Because it is a mortgage REIT, AGNC does not make direct investments in residential real estate. Instead, it invests in mortgage-related securities, which are mostly federal loans backed by government-sponsored firms such as Fannie Mae and Freddie Mac. These companies are known as Fannie Mae and Freddie Mac. The support of the federal government lowers the risk that is connected with these assets, providing investors income with a peace of mind. Number 9. Prospect Capital Corporation, PSEC. Business development companies, also known as BDCs, include Prospect Capital. Middle-market companies and financial sponsors of private equity investments can obtain funding from Prospect for a variety of objectives, including refinancing, leveraged buyouts, acquisitions, and more. Since it went public for the first time in 2004, Prospect has made more than 375 investments with a combined value of more than $18.1 billion. Its present portfolio includes 127 companies operating across 39 different markets, giving investors access to a wide range of investment opportunities. BDCs, much like REITs, are required to distribute at least 90% of their taxable income to investors in the form of distributions in order to keep their effective tax rate below that of corporations. Prospect maintains a payout schedule that distributes 6 cents per share on a monthly basis. Number 8. Main Street Capital Corporation, Maine. Another prominent public business development company with a broad portfolio, a successful track record, and a generous monthly distribution is Main Street Capital. Main Street manages a total of $5.7 billion in assets, holds 184 investments, and maintains a strong balance sheet. This business development company, BDC, places the majority of its emphasis on debt investments in lower middle-market organizations that generate between $10 million and $150 million in yearly revenue. Main Street Capital is currently selling at slightly less than $42 per share, and it has a trailing dividend yield of 6%. Number 7. LTC Properties. LTC Properties is a real estate investment trust that owns and manages properties that provide senior housing and healthcare services. The portfolio is roughly divided in half between properties that provide senior housing and those that provide skilled nursing care. During the pandemic, senior housing facilities were struck particularly hard, and long-term care shares have not yet returned to the levels they were at before the pandemic. Despite the difficulties, LTC was able to keep paying out its 19-cent monthly dividend payment even during the most difficult parts of the pandemic. Number 6. BROADMARK Realty Capital Incorporated, BRMK. The real estate investment trust known as BROADMARK Realty Capital offers a variety of financial services to real estate developers and investors. For the purpose of financing the purchase, renovation, or development of the residential or commercial real estate, the company makes available loans secured by the first deed of trust that has a short repayment duration. Since the company's founding in 2010, BROADMARK has provided funding for more than 1,200 real estate loans with a combined value of over $2.8 billion. The company's active loan portfolio is diversified and totals $1.5 billion, and it has exposure to properties in 19 different states across the United States. Number 5. Ellington Financial Incorporated, EFC. Ellington Financial is an investor in residential mortgages, and commercial loans. The business asserts that it concentrates its efforts on underdeveloped and specialized market niches, where it thinks it has uncovered market inefficiencies that offer the potential for financial investments. In 2019, Ellington began paying its shareholders a dividend on a monthly basis. However, in 2020, the company was obliged to reduce the amount of this payment by around 50% due to the pandemic. Since then, Ellington has been gradually increasing its dividend till it reached its current level of 15 cents per share, which is paid out on a monthly basis. Number 4. Gladstone Commercial Corporation, Good. Gladstone Commercial Corporation is an equity real estate investment trust, REIT, that invests in industrial and office facilities. The company places a particular emphasis on investing in high-quality properties located in major and secondary growth regions. At the end of the year 2021, the company's portfolio included 129 properties located in 27 different states. Because of how rigorously it evaluates the credit strength of its tenants, the company's occupancy rate has never been lower than 95% since it went public in 2003. Since 2018, it has maintained steady growth in its monthly dividend, increasing its distribution from 12.5 cents to the present rate of 12.54 cents. This was accomplished despite the pandemic that occurred during this time. Number 3. Apple Hospitality REIT Incorporated, NYSE, APLE. On the list of stocks that pay monthly dividends and are recommended to purchase in the month of May is Apple Hospitality REIT. The real estate investment trust is responsible for managing a portfolio of upmarket hotel properties located in the United States. Some of the main brands that are tenants in these hotels are Hyatt, Marriott, and Hilton, amongst others. Oppenheimer analyst Tyler Batory, who began coverage of the company in April, assigned an outperform rating to Apple Hospitality REIT and set a price objective of $23. He forecasts that the REIT will start making net purchases of assets in the year 2022, and he points out that it will be the first lodging REIT to resume paying considerable dividends. An industry analyst believes that Apple Hospitality REIT is well positioned in the market due to the fact that its portfolio of select service hotels is of high quality and is geographically diverse. Number 2. Realty Income. Realty Income, $67.15, a conservative triple net retail REIT, is possibly the stock that has been connected with receiving monthly dividends the most throughout the course of stock market history. The corporation took the nickname the Monthly Dividend Company so seriously that it registered it as a trademark as its official moniker. Since Realty Income is traded like a stock, its share price is subject to the same market forces that affect the prices of other stocks. On the other hand, it is a bond-like investment that can only be purchased on the stock market. It has reliable recurrent rental income flows thanks to its empire of over 11,000 properties, which are rented out to over 1,000 different people. Realty Income is committed to investing in high-traffic retail buildings that are resilient to economic downturns and, perhaps more crucially, Amazon.com proof. Realty Income is perhaps the closest thing there is to a firm that is fully safe from the threat of competition posed by Amazon.com, AMZN, and other large e-commerce companies. Number 1. STAG Industrial. Realty Income was really close to becoming proof against competition from Amazon.com. However, another company that pays monthly, STAG Industrial, STAG, $32.25, is taking advantage of the growth of internet commerce to their advantage. The properties in which STAG invests are mostly those used for logistics and the light industry. Do you know those dingy warehouse properties that are located close to the airport and are continuously being traversed by 18-wheeler trucks? That is the precise kind of real estate that STAG Industrial acquires and keeps in its portfolio. It is a certain fact that e-commerce will continue to experience explosive growth in the next years, and STAG is positioned to capitalize on this trend. Amazon.com is the largest tenant at STAG Industrial, which has a portfolio that handles e-commerce fulfillment or other activities for approximately 40% of its total space. What do you think of our video? Let me know in the comments section below. If you enjoyed this video and want to hear from me again, be sure to hit that subscribe button before you go. Thanks for watching.